Hey traders, a very good afternoon to you. This is Mark. Okay, pound gap down heavily over the weekend. Brexit news is just driving this currency at the moment, and you know what? This is really key now because we are going to get lots more of this moving forward. We are going to get big moves in the currencies as Brexit starts to play out. We've got European elections that are going to affect the indices, bonds, those currencies, local currencies, broader currencies. We're going to get individual stocks being damaged from Trump comments, from Brexit comments. There are going to be a lot of these repricing situations, I call them. So it's time to revisit the playbook, dig out some of the strategies, dust off the old volatility strategies, and look to see how to really refine these gaps and really take advantage of them, whether that's from a scalping perspective or whether that's using a scalper's entry and swing trading. I'm all about scalping, all about the price action and the day trading and the tape reading of the move. So I've got a couple of strategies and a couple of ways that I approach these gaps. Now, generally speaking, I'd prefer to trade these on stocks because stocks would just get more gaps. You get the cash close, you get a bit of an overnight session in the US, a bit of an early morning session, but then you get a cash open where the volume is bigger. So you do get the gaps, get the earnings gaps, the news gaps. You don't necessarily get gaps so much in currencies because they're open 24/5. But if you're getting news over the weekend, which we're kind of getting and I expect to get a lot more of this year, we're going to get these gaps. So what I always do like to do when I'm looking at the gap trade is look at it in a bigger picture, and same with any trade, is to take it into context of where we are. Now, the thing to remember when you're trading gaps is that the gap trade is far more powerful if you are gapping out of a very key level. In other words, if this is a level, this is a key level here, and we're gapping below it. Why is that important? It's because lots of different players are getting involved. If you're sitting in a range like this and then you gap, you're in the range, anyone here isn't bothered. No one is in pain. No long is in pain. No short is in pain. It's an expected area. You're not going to get that emotional order flow that you need to get on as a price action trader, as a tape reader to benefit. So I like to see gaps that are out of range. Same with the stocks, same with whatever we're trading. That's just that's the golden rule, if you like. Okay, so we've got this on the pound, and I have to say I was not prepared for it. I knew that we were having Brexit, so we've got to be careful we don't analyse this with hindsight and say, yes, we would have gone in here, would have gone in there. That's just no use to anybody. We've got to look at it subjectively, look at it within the rules of the strategy and see how it played out and whether the rules perhaps need adjusting or whether we can add some flexibility in there or whether, it sits nicely and still usable moving forward. So what are the rules I've got for the gap? So basically when you gap, you have one of three things happen. The drawing pan out here. We have this situation. I'm going to use a gap down as an example, but it's obviously vice versa for a gap up. Well, there's a few little caveats, but we'll focus on gap down for now. There's the close, and there is the open. Excuse the writing, but you get the idea. Okay, you either get one of the two things. You either sit there and everyone thinks, oh, what's going on? That sometimes happens with some stocks when you get basically all the action pre-market and then nothing else happens. Or you either get this, you get a continuation straight to the downside that kind of flushes out, the stops coming in, they're firing off, and there's a little bit of downside juice to be had on that, either on a first time pullback trade or just hopping straight on it when you just see those bids being hit. The other one is the gap fill tends to be attempted, so you get a good strong drive up and then you get a pullback. Now, what I like to do on this, there's two ways you can trade this kind of move, which is the gap fill, initial gap fill drive. Now, when you're looking for that kind of trade, let's refresh it and let's move up here now so we can have a bigger screen. When you see that strong drive up, I'm always looking to buy that first pullback because that's just, generally speaking, when you have that seesaw and the supply-demand balance is tipped one way, so in other words, massive demand coming in, when it backs off a little bit and you get a shallow pullback, you're normally okay, generally speaking, to buy that first pullback. That is one of my sort of bread and butter trades on an opening drive, on anything like that. And the fact that it's in a gap situation makes it even more powerful. So that's kind of one of them, and we can time that with various different ways, but ultimately the way we're looking at it, we'll probably go into that in more depth in another video, but ultimately we're looking for that first pullback, and this is basically what we got. And let's move on to a 1 minute chart. Let's drill down and see exactly what happened here. So you basically, when the market opens, you're looking to see what the response is to the gap. Is the initial response fear? Is it this is a bargain? Is it we're not bothered? That's the kind of assessment you've got to make. Let's clear some of this off as well because it'll give us a little bit more room to work with. Right, so we've gapped lower. In fact, let me zoom in. I don't like messing up my zooms, but I'll do it for this. You gap lower, get the first kind of pullback trade here. Quite a shallow pullback and then a push to highs. It's all looking very, very fair at the moment. It's looking reasonably bullish. The gap seems to have been bought. So the opportunity for that shallow first pullback is very, very shallow. That I'm not sure if you'd have got on that. You might have wanted a little bit deeper. The second wave of the pullback, guys, obviously most of the time you normally get three. The initial tiny wave, second deeper wave, and a third sort of trending wave that either ends the whole thing or we get a further drive. Generally, I'm really, really being broad there. Okay, so we have the drive, first sort of pullback, second pullback. I think this is a valid place to be buying. I think if you were looking for that setup, you'd say, well, you know what, we've put some support in, we've put a reasonable amount of time here. Perhaps the volatility might have put you off a bit, it's gone so quiet. But ultimately, if you look at it in the scheme of the drive higher, it's in the top third, which I like. It's holding, and then you're game on for a retest of highs. There isn't much in it, is there? If you're looking at that from a pip perspective or a percentage perspective, but they don't always offer what you want. But theory is that's the kind of thing you're looking for. However, what's more interesting is what happens after that. This is when you get the potentially juicy trades, if you like, the bigger wins, the bigger gains, the ones that can really get some leverage on. And the fact that when you get that first drive, the second move higher, which you get, which is this one we talked about, you're starting to put in a little bit of a topping pattern. These highs aren't blasting off and filling that gap up here, which is way up here. It's stalling. It's stalling. It's stalling. Look at these stall areas. And bearing in mind this is in the middle of the night now, so the volume is low, or low. It's a little bit higher because of the gap, but it's lower than it normally is during the day, and you're getting this kind of congestion theory within kind of a 10-tick range, really. So when you're seeing that, when you're basically seeing, if you put it in this perspective, the gap down, the drive up, that just keeps banging its head against a level that's way before the gap fill, take notice, because at that point in time, you've got to be saying to yourself, you know what, my risk is reasonably quantified now. If I look into short for a revisit of this gap low, or for at least a revisit of kind of the midpoint, which is quite a good way of framing it, then at least I can quantify my risk and put my stop above this kind of cluster of highs and wait for it to roll over. So that's like the second phase of the gap trade. And actually that would have worked out quite nice. Let's move to a 3-minute chart here. Perhaps overnight would have put you off a little bit, as it did me, is why I didn't get involved in it. But you can see that really starts to show its true colours there. Struggling, then rolls over, fades, does about 50% of the move, and then tries to attempt again. And it's just showing you that the supply is still in control. Demand is not able to outmaneuver it, and you're still getting that pressure coming in. Of course, a different story when the UK opens and you get loads of different people getting involved in it, but it still struggled to get above that level, that overnight level, that small little overnight level that supposedly no one was watching, became a really, really big, interesting level. Spikes through it, couldn't get through. Finally managed to crack it, but it took a lot. And you can see how if you manage to wrap a trade around that, structure it so that you're quantifying your risk, that's all I'm after. I'm just looking for a reasonably high probability trade where I can quantify my risk. And if you can do that, find a spot to do it, take your entry, and if it gives you something, great. If it doesn't, you move on, you look for the next one. But I'm definitely going to be looking forward to more gaps like this. Brexit, European elections, you name it, it's all coming out. So we'll be setting up screeners for that, we'll be setting up scanners for that, and we're being prepared to hit these as and when they occur. Take care, guys. Speak to you soon. Bye bye.